Hello and welcome everyone to the National Veteran Small Business Coalition's virtual training series. I'm thrilled today to have, this is number 4, Vik. We have Vik Singh from Vik Singh CPA, accounting firm that specializes in GovCon accounting, compliance, and advice or consulting. I'm going to say consulting services as well, Vik. I'm going to add that one on the tagline for you. And today, hey, we're going to talk about from submission to closeout, so what happens. We've been through our 3 series, and so now we're ready to, our project is over. The job is done. And so I'm assuming this is where we're going. What happens next after everything is all said and done, and I've given the government what they have asked for. So with that, I'm going to turn this one over to you and let you take it away from here.
Mary, thank you so much having me over. We last 3 series, we talked about provisional billing rates, we talked about incurred cost submission, and we talked about internal controls. On this series, when we talk about internal control, incurred cost submission, after we submit that to DCAA, where do we go from there? So this is what this is all going to be about.
Okay.
Everyone, thank you for listening to this. Again, we're going to talk about incurred cost submission. There's different steps. Once the incurred cost submission is submitted to DCAA, and I think we briefly touched it in previous 3 sessions, once the DCAA receives the incurred cost submission, the very first step they look at is it even correct? Correct meaning they're not looking at your costs, they're not looking at what contracts needs to be closed out and so forth. They're just looking at do each tab or each schedule within the incurred cost submission, does it tie to the next one? Because they're all linked with each other. And, we go from, adequacy review, then audit selection, audit field work, rate determination, and the final agreement. Step 1 is acknowledging. So DCAA, when they receive your incurred cost submission, you will receive an email within a few days or a week saying, hey, we have received your incurred cost submission. We will review for adequacy. And that's the next step. Now, coming back here, when they're reviewing for adequacy check, if it's inadequate, you will receive an email saying, hey, your Schedule H does not tie with Schedule I. We briefly talked about Schedule H before, which is basically your year-to-date cost, all the direct costs by cost type, cost plus type of work, fixed price, T&M, all adding up, tying to your general ledger, and then tying to your Schedule I, which is the cumulative billing that you have done with the government on which the contracts have not been closed yet. Once you have gone through the adequacy checklist and you received a confirmation from DCAA that your incurred cost submission is adequate, the next step for DCAA is to decide if they want to audit you and or issue you a low-risk memo. What does low-risk memo means? Low-risk memo is basically saying, hey, we've been into your business before, maybe a year ago. We looked at your internal controls. We looked at your timekeeping policy about a year and a half ago, 2 years ago. And you guys were doing great things. You have a acceptable accounting system. You have great internal controls in place. And plus you aren't really spending that much money. You're a small government contractor, so you're low risk for us to find any taxpayers' money that may be unallowable, because you have proved yourself that you are a responsible government contractor. So therefore, we're just going to issue you a low-risk memo, meaning I'm not going to come audit you. I'm just going to believe whatever you say. And that's the position you want to be in.
I
right?
would think so, right? And so
Yeah.
does that happen a lot, Vic, or is that, how often does that happen that people are classified as low risk, or do they have to come back every so many years if you get so many low risk ratings kind of thing?
First, when in doubt, DCA will come knock on your door. Number
Yeah.
one. Number two, I think 3-year average is standard.
Okay.
They might, 3 years later, they'll be like, hey, it's time to audit them just to make sure they're still following the directions.
Yeah.
Okay. Now, annually, DCA is required to issue a report to Congress and tell them what they accomplished, where they had it, what are their milestones, what are they trying to do? Like, it's like a performance type
Right.
of
Yeah.
report. Like,
Yeah.
so the report that DCA issued, I believe was March, April 2026 for 2025, they issued about 2,800 low risk memos nationwide.
Okay.
That's huge, right?
Yeah.
I don't remember the exact number how many incurred cost missions they went through, but 2,800 risk. So there were about 2,800 government contractors that DCA just say, hey, I've been into your system before. I know you're doing it right. You're responsible. I don't need to babysit you. You're doing good,
Yeah.
right? And that's where you want to be. That's where
Right.
a small government contractor want to be.
Yeah. I get that. Yeah. You want to be in that group so those 2,800 people are probably doing, well, they're doing the happy dance because they're like, hey, this is great. We just have to keep moving and doing what we're already doing. So, yeah.
100%. I mean, or other option is that DCA comes and audit you, and guess what? Now, depending on who, I'm assuming, I'm thinking about 20 million to like $50 million government contractor.
Right.
The controller is involved, the CFO is involved, the senior accountant is involved, and how much time is being consumed by these people that they could be doing something else.
Exactly.
So, having the right system, the right policies in long term, there's a return on investment. I think the ROI, having a solid foundation, is a plus for everyone.
Right.
And
Yeah.
DCA don't have resources too, like just to send them everywhere, right? So they also want to be conscious about making sure, because it's also costing them to come audit you.
That's true. That's very true.
So if there is an audit, the field work, if the DCA is coming in, knocking on your door, and they want to ask you questions, what are they looking at? They want to examine your indirect cost pools. Is it consistent? And I find this challenge in a system that are not fully GovCon acceptable accounting system, i.e. QBO, QuickBooks Online. It's not, I mean, can you make it happen? Sure you can, but there's a lot of human involvement in there versus system like Uninet or CostPoint. These controls are put into the system that you can rely on. Now, if those systems are properly if those configurations are properly set up, then your internal controls and your business rules are properly set up, then you have more chances of being consistent and make sure your data is flowing correctly into the system.
Right. Yeah.
The other thing they're looking at sporting documentation. We spoke about it many times. DCA could come in and ask questions and randomly select, let's say, 5 transactions. Now, they're gonna go from the cost all the way to the bank statement, or they're gonna go from the deposit all the way to the vendor invoice. So either they're gonna go backward or they're gonna go forward,
Yeah.
right? an accounting term is called vouching or audit trail, right?
Okay.
Uh, so we want to make sure we have supporting documents. End of the day, if any transaction is selected by an auditor, they should be the person, the point of contact at the government contractor's facility is able to answer and provide the justifiable answers. Evidence. They need to provide evidence. Now, assuming everything came in and we have submitted our incurred cost submission. We said our wrap rate was 1.60 on one of the overhead, but then the DCA has come and say, hey, sorry, your wrap rate should really be 1.55 because I'm disallowing all this cost. What happens then? Then either you fight back in a good fight back, a argumental fight, positive argumental fight back, and provide supporting documents. Hopefully, this is all happening before the report is issued. Because once the report is issued and it's already gone to the contracting officer, it becomes that much harder. Okay? I've been in a situation where auditor had come to me and trying to disallow about $300K worth of healthcare cost. And it was a situation where there's an insurance called stop loss. And, the contractor who have dealt with it, they'll know exactly what I'm talking about. But this particular auditor didn't understand what stop loss was. So what happens, Mary, is, in a self-funded type of health insurance, it says, hey, it's going to cost you $1,000 per employee per month for healthcare costs, as an example.
Yeah.
But if you buy this insurance called stop loss, then I can give you this rate for $500 per month. But you're going to have to pay this extra insurance, which is stop loss. And if you do that, your cost may come down to $800 end of the year on average.
Wow. Okay.
Right? So stop loss was a good thing. And we had that for 3 years. And the auditor had come, he didn't understand properly, or, they weren't defining stop loss properly. So we had to get involved with the legal side and say, hey, the accounting side is correct, right? Now we need to, and I believe not the actual report had gone to the CEO, but the communication had gone to CEO already. And we had to explain why having a stop loss insurance was beneficial to the government. And we actually had to show the trend analysis. If we did not have a stop loss, it would have cost the government this much, $1,000 per month per employee. Because we had a stop loss, it costed the government $800 per employee per month. So we had to show supporting documents why this stop loss was important to have. So these little things, not always the auditor who's coming to audit you is going to understand what you're trying to do. So it's your responsibility to explain them and justify it.
Right. Be able to make sure that the auditor understands the full scope of why you have these costs and why, right, or you have these incurred costs and how you've been a good steward of federal dollars.
That's where negotiating comes in. We said 160, you're saying 155, but maybe we need to agree on this number or so forth. So negotiating has its own chapter itself. We won't get into details, but end of the day, I think it's important to understand where the incurred cost submission has gone after you submit it, what are the steps, and what could be the final results. And I think being proactive and staying tuned into what you have done and where may it end up is important.
Yep, exactly.
I think we talked about this in the provisional billing rate, but I'll repeat. I mean, obviously, if your final rates are higher, you're underbilled. You're really hurting yourself. And if it's vice versa, your final rates are lower, you're overbilled. And then if you're overbilled, that means you really should have extra cash in the bank account.
Uh-huh.
Did you utilize it, or did you save it on the side to give it back to the government, right? So
There you go.
it becomes that cash management responsibility.
Yeah.
And not only that, knowing that you're actually overbilling is important, because if you don't know you're overbilling, then you are most likely going to end up spending that money.
You go.
Yeah. Finally, when you have agreed to a rate, you have, so the steps are, you're billed for last whatever 1 year or 2 year, depending on when you get reviewed. Let's say you're billed, you submitted incurred cost submission, you got your incurred cost submission audited, you're settled on the rates with the DCAA. DCAA issues a letter saying, hey, here's your final rates. You have 120 days to submit a final voucher. What does that mean? That means DCAA agrees with our cost. We're all on the same page. Now, if my rate, let's say I was billing the government at 1.80, and my actuals were at 1.90, which means I have underbilled. The government is giving me 120 days to build that 10 cent difference. And if you don't, the government has the right to take that unused funds and utilize them someplace else. And, we legally can't go and collect that money.
Okay.
When does the closeout start? Under FAR Part 4.8404, on one of the schedule, I believe it's a Schedule O, we have to notify DCAA in the incurred cost submission that the contract is physically complete, meaning we have, assuming we're prime contractors, the contract ended December 31st, 2025. Well, we also have subcontractors, and those subcontractors have submitted their invoices to us, but they still got to go through with DCAA and get their final rates approved. And do they have a final voucher to be submitted to us as a prime contractor? Once that's all done, and then there's also a contract closeout package that goes out to a subcontractor saying, hey, we have completed all of our responsibilities. If there were any assets that were held by subcontractors, they are turned back to either government or to the prime, and official documents has been signed off on saying this is legally done, complete. We have delivered everything we asked for. We're done. Once those documents are completed from the subcontract to the prime, and then the prime gets to say, hey, we are physically complete with this project. And then DCAA will work with the prime to close out the paperwork. Then it's done.
Wow. There's a lot to close out, isn't there?
Yeah, and I think this is what the boundary lines are, from accounting to the contracts department and this and that. So I'm trying to stay within my boundary lines, lane there, right? So
Right.
so this would fall more on the department contract side.
Okay, the procurement organization. And then, okay.
Okay.
For contract management, yeah.
There you go. The 5 areas that DCA reviews, I think we talked about it already. It's basically making sure all the billings is correct, the final voucher is submitted, the subcontractors have been closed out, and then, is there anything pending? Has everything been delivered? Has does the contractor is as a prime submitted all the documents and make sure all the funding has the contractor worked with DCMA. Now, DCM is the other agency. Have they worked with them and said, hey, we're done with this project. Here's all the final closing documents. We're all settled.
Yeah.
I think this is important slides, and I can, I've been through with some of them. It becomes very hard to close a contract if, for example, you worked on a project, you were dealing with the subcontractor, and the individuals that you were dealing with either have left the company or that company got sold to another company. It becomes hard at that point to actually deal with contract closeout because the people who you were dealing with don't know where the information is, or becomes hard. So my recommendation to the government contractors would be, as you're getting closer and closer to wrapping up the contract, make sure you deal with it at the same time, right? Don't delay it. Sometimes there may be a possibility that, hey, subcontractor, yes, there may be a difference in billing, but either they're willing to take the risk on a few $1,000s, or the prime contractor is willing to take the risk on a few $1,000s to prevent a bigger difference down the road when everyone is not there that were involved. So I would say, as soon as the information, as soon as you physically, you're done with the projects, let's wrap it up. Make sure the contracts team, your accounting team, your CFO, the business owners are fully in communication and working with the right people to wrap it up.
Yeah, I agree. Especially if the program or the project is like a phased project, you have, let's say, 3 phases and have subcontractors throughout, but maybe subcontractor ABC, they're only for the first phase. You want to go ahead and get all of their documentation and closeout done at that time. So you're not waiting, till the very end of the contract. You get them right when their work is complete. That makes total sense.
Yep. Well, the recap, part 1 was provisional. Part 2, we talked about ICS. In this last one, we was internal controls and documentation. And this is on what happens after we submit ICS. And I think that's all I have for you, Mary, on this one.
So this is the total wrap for this series, Vik, is what you're telling me. Okay. This has been a lot of great information, and I'm looking forward to the next series that we're going to do. So with that, everyone, you have Vik's contact information here. If you have questions or you just want to give him a shout out and thank yous for doing this series for us. Vik, again, thank you so much for pulling all of this information together for us. With that, everyone, I am going to call this wrap for the series, and we'll see you on the next one. Bye, everyone.